Today, we will continue our journey, keep scalping and day trading momentum-based assets. We will rely on our best scalping indicator and strategy. Markets are not easy to trade. We need to focus on more and more specific assets. No more user stock, let's start now. Today, let's talk about changing bias and what kind of price action we should pay attention to when we are thinking about shifting our directional bias. If you look at the Solana chart on 3-minute time frame, you will notice two distinctive liquidity levels. At the bottom, we have the previous day's low and the previous week's low together. At the top, we have the previous day's high. We also have this relative equal low string below acting as some extra confirmation for our directional bias. And we got this small parabolic liquidity string above combined with the previous day's high. If you check out 4-hour chart on the right, you will see this gigantic bearish imbalance right here. This becomes important because it lines up with a very specific price action zone. Price sweeps the inner liquidity and reacts to this inner support and resistance flip zone. So what should we expect here? In my opinion, we should be looking to take a short trade right here, because this is what I'm expecting to play out. This feels like a solid idea, and it lines up nicely with all my patterns and concepts. But the reality is pretty cruel, because you can have a strategy that wins 90% of the time, but it can still fall apart on you. As you can see, this trade and the price action ended up failing really badly. This 4-hour imbalance was completely broken and it didn't work the way it was supposed to be. Instead, we are now seeing a strong bullish imbalance forming on the 4-hour time frame upwards. Then this happens. When you look at the structure, you can see it making new breaks one after another, pushing higher toward the target, which is previous day's high. This gives you endless small imbalances inside to move, letting you take a quick little trades along the way. So how do we adjust our directional bias on the fly? And what should we actually pay attention to? You follow the imbalances and liquidity and you connect all of that with the structure. For example, inside this big hourly bearish imbalance, we would normally expect the price to follow the structure and trend, dropping and crashing badly towards the previous day's low. This is what should we expect. This is the natural move here. However, the big bearish imbalance fails like in our example and the inner structure starts breaking upwards with a trend. We need to be extra careful and think about our bias. It becomes very likely that the trend or directional bias has shifted now, and the price might be hunting a new target such as the previous day's high above. So when you are trading, do not get stuck on a single bias. Price is constantly moving and can switch targets within the same day. There's nothing fixed or guaranteed in the markets. You need to adjust to whatever is actually happening in real time. Okay folks, ending this great lecture. Learned about great trading concepts today. Please take care and see you in the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free TradingView indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.